All right, last piece from John Burns Research and Consulting. Did you call it JBREC? JBREC? Did you make that up?
No. They've done that with
call it?
themselves. I just sometimes I'll put that in the notes. if I'm feeling.
This piece from Chris Nebenzahl, friend of the podcast, as well as Wes Staten and Daniel Nguyen.
When?
No, it's Nguyen.
Okay.
It's like a Vietnamese. Anyway, Matt, apartment markets cools, but that's a good thing. And this was back to this conversation that you kind of kickstarted a couple minutes ago about this idea of the reset, and maybe we have a little bit of a difference of opinion on what that reset means. I'll let you go first.
So I think they spin it a little bit differently here, but I would argue that a reset's not a recovery. It's a restart, and it's not necessarily going to follow the same rules, the same course, and the same expectations as a current market. A recovery is just, all benefit, kind of a little less drawback.
Sorry, let me ask you this question.
Yeah.
Have we reset, or are we resetting?
Well, so would be my next point is this is uneven, really, really uneven. I think that this recovery is a moment in the reset, but this readjustment, recalibration happens first. I think that recalibration has happened earlier for certain markets outside of the Sun Belt, but for the Sun Belt, no one's agreeing on something.
Let's exclude the Sun Belt for a minute, and for a second, and then we can bring the Sun Belt back in. So you almost do need to talk about the regions on their own, and then maybe we can make like an ensemble model. Combine kind of our thoughts about the different regions. I mean, it's like the Midwest. Is it resetting? Is it recovering? Is it in recovery?
Well, no, I think
it reset?
I think that the Midwest is in recovery. I think the Midwest's resetting happened, in the past few years when we did see tangible value declines, and it wasn't as sharp because there wasn't so much overbuilding. I think that if you do look at nationally, there's a lot of opportunities because some places are being negotiated. You can catch places at different moments in broad regions, really, in different moments. And maybe there is a argument to be had to come in and swoop in the Sun Belt at some point. But I think that there wasn't the fervor in the Midwest and the Northeast like there was in the Sun Belt.
In terms of building.
Yeah, in terms of building. And so, the negotiation, the resetting and the readjustment phase is going to be choppier because they're overbuilding, but also because maybe the investor attention it kind of obscures it a little. I don't know.
So what you're saying is in like the Midwest and the Northeast, really less of like a full reset, but more of like kind of slowing down, like recalibrating, kind of like needed to catch its breath a little bit.
Yeah, well, if you want to say that,
rather than like in the Sun Belt, like in Austin, it's like okay, we got patience got to
stronger reset, a stronger readjustment in the Sun Belt,
and then we got to bring them back.
Yeah. Then whatever process they are describing here, whatever I'm insinuating here in terms of resets, happening more strongly in the Sun Belt, and it's at an earlier stage than the Midwest. But like what I was kind of harping on this whole episode is like, this does mean there is some pain and there's some work to do because it's not all going to be easy. And part of that reset, part of that readjustment is adjusting those hard things, that we just kind of discussed. And that means like saying we've said no to a lot of deals, and it's almost reassuring that it's not that easy because we've been through this. We've been through this for 2 years, and we can kind of see things with a little more clarity. But yeah, I would like things to move at a different. I'm sorry, I'm kind of shifting here, but I want to turn back to my notes. It's the idea that the Sun Belt is moving national rents down is something that I put earlier in my notes. And I do think that that there are general trends that run through everything, and we have looked at rent growth stagnation. There has been relative stagnation in the Midwest, relative stagnation in that same process is just it's just happening harder in the Sun Belt than it is. See, now I'm back on track. Okay, these things are so dramatic in the Sun Belt, and things are just at a different stage, and they're happening more weekly in the Midwest and Northeast.
Yeah, I think the Midwest is restarting, and it's just not a like pedal to the metal. We're going to restart with really, really strong rent growth, because it's still also in the Northeast, still getting through still record supply relative. It's just not as extreme as in the Sun Belt.
Yeah.
Just want to just mention on the article, this piece from John Burns Research and Consulting. I think this is a good little just blurb breakout. Don't be fooled by today's rent growth struggles. Saying, this is what we were saying earlier. There's no choice but to rent, with homeownership historically out of reach for many households. Renting is the only option. Following new supply, apartment completions are plunging, and occupancy will return to normal soon. Then go north and west. While the Sun Belt digests a flood of new supply, the Northeast, Midwest, and parts of the West Coast are already thriving. It's basically what we have been saying.
Yeah, I mean, you can gerrymander a Sun Belt that has a lot more success, but I think that in general, like that's where we're seeing the struggles, and it's very interesting how much. I mean, they must be really building a whole lot, because if 3 out of the 4 regions are doing okay, but then there's just one laggard, that's the size of that supply wave over there.
I thought this piece was interesting. Also, smart capital is moving in. It says transactions are light, stalled by rate uncertainty and valuation gaps, but opportunity is out there. Institutions with long-term view are selective. They're favoring great locations. Private capital is active, chasing distress and all-cash deals. But to be clear, deliveries are slowing and starts are trending near levels seen in the early 2010s. So it's saying here, kind of ending the piece, the next cycle is quiet for now.
Yeah.
And that, to me, that sounds like a time to get in when things are quiet. People haven't started making the moves yet.
Yeah.
But admits, I'd say a significant amount of noise, and I'd even say some of the pieces, there's like piece from Trepp earlier, if I can find it, a lot of this is noise.
Yeah.
Just like this is just some of our thoughts generally on the market, and it's here's a lot of numbers and statistics, and here's a bad way to look at the market. Tariffs I think are. There's no better example of noise than tariffs.
Yeah.
And uncertainty and tracking uncertainty, trying to quantify uncertainty. So much of it it's got to pay attention to it all, but it's relative noise.
Yeah.
And again, you can't ignore it. But when you're making a decision for an investment that's going to last over a long period of time, more than a couple of years, consumer sentiment. 5 years after you've done the deal, it's more of, what's the condition of the deal, market conditions when you fully season the asset and you're looking to capitalize and sell it in 3 to 5 years. And it would be somewhat textbook to buy something at lower consumer confidence when there's market uncertainty and then dispose of it when tides have shifted and consumer confidence is high and prices are high. I mean, that's again, that's business 101. Buy low, sell high.
And that's probably informing a lot of the sentiment among in the NMHC as well. Is they recognize it's around the 50% mark for their sentiment on the market. But I think they do recognize like this is a moment where we can see clearly that supply's falling off. We have those absorption numbers again that have just been going up every consecutive quarter for the past year or so. There's a really good. I think there's a strong confidence that you can have even though things were so uncertain. And like I mentioned before, we've been through this, so we know how to survive now. And I think that's a really big part of it.